What's up, guys? Happy new year to all of you, both new and old subscribers. Welcome back to my YouTube channel once again. So we are in 2023, right? It's a new year, and trust me, this is going to be massive. I'll be sharing a lot of insane stuff that is going to take your trading to the next level. But in the meantime, today I'll be sharing with you something very juicy.
Really?
That is going to take your trading to the next level. Okay, so before we delve onto the chat, I want to let you know that I have a very special announcement. Right, actually today is my birthday, and it also happens to be the 1 year anniversary of my YouTube channel. Okay, so just to celebrate with you, I'll be making a special announcement in the course of the video, so you don't have to skip any part of this video, else you're gonna miss this special announcement that I have for you. Okay, so real quick, let's delve onto the chat and let's see what we have for today. But before that, if you're not subscribed, hit that subscribe button. Okay, so real quick, let's step onto the chat and let's see what we have for today. So when it comes to trading the forex market, right, there is one particular thing that differentiates the consistently profitable forex trader from the losing trader, right?
What is it?
And I know that there are a lot of strategies out there. To me, almost every strategy works, right? I'm not saying all strategies work. I'm saying almost every strategy works, right? And in as much as there are other factors such as psychology and the kind of strategy that you are trading, this one thing that a successful trader does is backtesting, right? Now, the funny thing is, a lot of people think that their strategies don't work, but the truth is they are just backtesting it wrongly.
Who cares?
And the moment I found this out, I break free from whatever stress that I was having with my strategy. Initially, I thought my strategy wasn't working, right? Until I found out this, okay? And I'll be showing you how to backtest correctly from this video, okay?
Show us what you got. 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 Show us what you got.
So real quick, I want you to be noting certain points down. I'll note this point down with you. I'll delve into it, and then I will show you how to do it proper. Okay, so the first point that you might want to note down is never ever backtest with the bar replay tool. Now, I know a lot of you have questions with this point that I'm making, right? But I'm going to explain, okay? I'm not saying that when you're backtesting, you shouldn't use a bar replay tool like that, okay? Probably, let's say you want to backtest some price action that is far away. You can use the bar replay tool to re-engineer price back to that area, then you can backtest. But then what I'm trying to say is, for instance, let's say you want to backtest 29th December like this, okay? You're going to find traders using the bar replay tool, okay? Like I said, you want to backtest this 29th December price action. You're going to find out that traders will use this bar replay to re-engineer price back to, let's say, the close of Asia like this, okay? And now they will now start looking for trades based off their strategy.
That is just your stupid opinion.
The truth is, when you are doing this, it almost looks like you are trading on the live market. And believe me, you are going to go through that same frustration that you were going through on the live market, taking a lot of losses. In as much as you have seen whatever the price action has done, trust me, when you start backtesting like this, you are going to frustrate yourself and you feel like your strategy doesn't work, right? Instead, what should you do? And that leads us to point number 2. Okay, so what you're supposed to do in point number 2 is always make sure that you have the price action for that particular day available to you, visible and available to you.
Okay, fine. That's okay with me.
So what do I mean by that? So like I said, you want to backtest 29th December, right? So instead of re-engineering price back to, let's say, the start of the whole 29th December, what you can do is you can re-engineer price back to, let's say, the close of that 29th December, which is around 12 a.m. right in here, okay? Then you are going to have this whole price action of 29th December available to you to backtest, right? Now, in as much as this looks like you are marking your trades off in hindsight on the chart, believe me, it is one of the most powerful ways to get your mind to sync with price action in relation to your strategy. Okay, so anytime you have this kind of data available to you, you can just backtest with your strategy in hindsight. Please don't be afraid of anybody.
I'm not afraid.
Okay, you are trading for yourself, you're not trading for anybody. Hence, feel free to do this all the time. When you do this, what happens is price action sinks into your subconscious mind. And once you see this happening a lot of times, right? Let's say you know that when the market does, let's say 1, 2, 3, it will come back and do something like this, and then you can get a trade, right? Once you see this setup happening a lot of times, it is going to sink into your subconscious mind. With that, you know that you have an edge over the market. Okay, now the third thing that you should also do when backtesting, don't worry, I'm going to show you how to backtest. I'm going to use the same price action to show you how to backtest, right? So the third thing that you can also do is always observe price action, and then you make notes, and then you make modifications when necessary. Okay, so for instance, you have this 29th December price action that you want to backtest. First of all, we are not using the bar replay tool to re-engineer price back to wherever I started from, or let's say landing, or whatsoever, or whichever time period that you'll be trading. This time around, we are having this whole price action available to us. Then now we have our strategy at hand. We want to compare our strategy. We want to look at what we are looking for in our strategy to take a trade. Okay, so when we find anything, we compare to our strategy. If there is any modifications, then we make. Now, when you are doing this, a lot of people feel like mentors are what are going to make you a better trader. But believe me, mentors or mentorship or forex courses is just one part. Okay, the market itself is the real teacher.
Really?
Okay, because when you see the market tell you that it is going to be doing this, most of the times, or it will be winning with this kind of setup most of the times, why not pick from the market itself? Okay, so anytime you do this, anytime you observe price action, you take note, you make modifications when necessary, you become better and better and better. Now, another point that you should also take note of is you need to journalize your trades. Okay, you need to journalize your trades. Then the last point is you need to always try as much as possible to do end of day markups. Okay, so for instance, today is 3rd January. When the day ends, you can come onto the chart and then you backtest or you mark up every setup which fits your trading plan. Okay, that also helps price action to sink into your subconscious mind, that is in relation to your strategy. Okay, so for instance, I'm going to be using this 29th December as an example. Okay, all right, so concerning the special announcement that I said from the beginning of the video, right, I actually wanted to make an offer, right, because today, 3rd January, happens to be my birthday, and also this the 1-year anniversary of this YouTube channel. Okay, and I can also see that I am about few subscribers from hitting 3K, right? So just to celebrate this with you guys, I will be holding a 7 days boot camp, right? 7-day boot camp, just for 10 serious traders, right? I want just 10 serious traders who would like to invest in their trading career. Okay, so instead of my normal private sessions fee of $350, now you're gonna have it for just $250, right? And the beautiful thing is I'm going to cover everything that I cover in my private sessions in the bootcamp, right? So you're gonna have access to also the Discord and all other resources that I use or that are reserved for my private channel. You're gonna have access to them. Okay, so the registration for this offer ends on 23rd of January. Okay, so it means you have about 20 days to register. Okay, so if you want to make any inquiries on these, if you want to contact me and make a registration, you can reach me on Instagram, Wealth Empire Capital, or on Telegram at Wealth Empire capital. Okay, so yeah, this is the quick announcement that I want to make. I hope that you will take advantage of this, because this kind of opportunities comes once in a while. Okay, so yeah, let's continue with the video. So fast forward, I know that, let me quickly start from the M15, something like this. Okay, now this is what I'm looking at. So for instance, I now have this high which created this kind of low over here, and then we make another push to the upside. We took out this high, and then we came back down, and then we took this low. Okay, now seeing this, okay, I know that I will have a point of supply right in here. Okay, I know that this is a high, a previous day's high, right? However, I'll just mark my supply zone simply because I have this break of structure right in here. You can call it a liquidity gap or whatsoever, right? The reason why I'm saying this is, we can have this equal lows, this as equal lows right in here, and this as a candle that took out, or this as price action that took out this equal lows, right? Hence, when price is coming up, we can expect price to even take out this high, because first of all, this is a previous day high, but I'm only going to respect whatever price action is telling me. So currently this is going to be a supply zone for me until it gets taken out, right? And so I can start looking for trades right in here. Okay, so real quick, I have this in here, then I can step onto, let's say, M1. Okay, now even without going on to M5, we can see what price action or what price did over here. We took out this high. Okay, so it means that we have some level of demand right in here. Okay, now the funny thing is, a lot of people will be marking this demand expecting price to come in, but price never came in. Where did price actually come to? Price actually came in to take out this Asian low with a little wick. So we took out the Asian session low. Now this fits my trading plan. I know that I have certain setups that looks like this, okay, where I need price to take out the Asian high or the Asian low. Then I can look for my confirmation, then I can take my trade. Okay, so once I see this, I know that I have taken out the Asian low. I have a beautiful confirmation right in here, and considering timing and all those stuff, I have this beautiful trade to take. So this will be my first trade right in here. I have another confluence right in here, and I'm not going to mention what it is. If you know what it is, fine. If you don't, well, you need to find out yourself.
Okay.
So this will be the first trade that I can take, and probably my first target would be to, let's say, the mid-Asia or the Asian high like this, or even to my supply zone right in here. Okay, that would be my first trade. Then another thing is, most of the times when I see price action like this, looking at timing and how this Asian low was grabbed with this small wick, I'll have doubts. Hence, I'm going to wait for extra confirmations, right? So this will be the second trade that I can take, and this fits also my plan. This is one of my entry confirmations. If you are part of my private sessions, you understand what I'm talking about here. This is one of my confirmations real quick. So I can also beautifully take this trade right in here like this. My stop loss right there for, like, let's say 2.5. okay, and the same way I'm gonna have my target to, let's say, Asian high for the first one, or to the supply zone that I initially marked. Right now, once I have done this, right, I can come up with my call out sign like this, and I'm gonna say, let's say the first trade, this trade was like a 1:28. okay, so 28R. So I'm gonna write 28R. okay, and stop loss was like 1.5 pips, so I'm gonna write there 1.5 PSL. okay, and SL. okay, SL. And then another thing is time. Okay, so I indicate the time that the trade was triggered. So this one, it was 7 a.m. So I'm just going to write 7 a.m. Frankfurt open. Okay, and I'm going to leave it like this. I'll do the same thing for this one. Okay, then I'll still go ahead to look for other trades that meet my trading plan. So in here, I know that there are a lot of smart money traders who feel like, okay, there is this supply zone right in here. Okay, trust me, there are smart money traders who do that. They'll be like, okay, we've grabbed liquidity here, so they'll mark this liquidity, and they see this beautiful point of interest right in here like this. Okay, so I'll just mark this as a trap, not as a trade that I'll personally take. So I'll indicate here as a trap. Why is it a trap? They see this as a supply zone. This is a confirmation for them to take the sell. Okay, so I'll just put this right in here. Mind you, I'm just back testing. Okay, and back testing doesn't have to be like maybe only winning trades or whatsoever. It has to be things that you need to avoid trades, or let me say trades that you need to avoid, trades that you can take, and even losing trades. So there are people who are going to take this as what? A sell, but it is a trap. So you need to indicate that. Then this will also be another particular trade that I would take. Why would I take this? First of all, I know that we're making higher highs and higher lows right in here. So we've taken out this high over here. So I know I can look for a counter trend, right? And another confluence is I have taken out the Asian high. Okay, I mentioned to you, this is one of my setups. If I see the Asian high or Asian low taken out, I look for my confirmations and I take a trade. So beautifully, Asian high taken out. The last structural high, internal structural high, also got taken out, and I have this beautiful confirmation right in here as a sign of bearishness. So I'm also going to indicate that nicely. I'm going to mark it right in here. And like I said, it is not always been a wins. Okay, losses can be part. So I'll have to be honest with myself. That is also one thing when it comes to back testing. You need to be honest with yourself. Don't say because it is a losing trade, you're not going to mark it as a trade that you're going to take. No. So this particular trade, I will personally take it like maybe to the Asian low, or maybe as a hedge to this buy. Okay. So maybe after these two trades taking out the Asian high, I'm looking for it to sell back down into, not even to take out this low, but like into this point of interest over here, because this is making higher highs and higher lows. So I'll really mark this as a demand zone, and I'll be expecting price to come down in here. So this will be like a counter trend trade, right? But this trade failed, so this is an L. Okay, whether an L or a break even, whichever way you're going to call it. So let's call it a break even. Okay, then my next trade comes off from where? Now let's look at what price action was doing. This was making higher highs, higher lows. We broke out this high. Price showed an intention to sell. It failed, and then we made a push. So it means that this place will become a relevant point of interest for me to look at. Okay, so real quick, I can mark this point of interest right in here, and I have this refined 1 minute point of interest. Okay, this 1 minute demand refined, and I have this imbalance right in here. I'm going to indicate all of them. Okay, imbalance, and there was also a break of structure right in here to the top. Okay, so I'm going to indicate that also BOS. Okay, then I cannot look for trades. Now in here I could have gotten a trade, but it didn't fit or it didn't give me any confirmation. Okay, so you see me saying something like, maybe I can look for, or I could have taken a CT trade here, but no confirmation was given, so I let it slide. Okay, so this is also one thing. Always be conscious of the fact that this backtesting you are doing is for your own self. It's not for anybody. So feel free to write your own English. Okay, write your own English, whichever way you're going to understand what you've written, just write it. Okay, good. So I'll just write this. It would have been a counter trend to, let's say, to the downside right in here. Okay, so it would have been something like this. I would have expected something like this. Boom. And my stop loss will be, let's say, above structure like this for like, let's say, 3 pips, and my target will be to this level of demand in here, or let's make it even 7. Okay, like this. But then no confirmation. Okay, after this break of structure to the downside, you realize that price never retraced, so no entry. You can indicate this nicely, just as a trade that you couldn't get in. So far so good. We have seen 2 winning trades, 1 trap, 1 break even or 1 loss. Let me make it a loss, so 1 loss, and then 1 on triggered trade. Okay, it didn't trigger us. Okay, we didn't have any confirmation, or we didn't have price coming to trigger our trade. So now we are conscious of the fact that internally we have made this push to the upside, and there was also another trap right in here. Okay, everybody has seen that price has come into certain levels, and they have seen this break of structure to the upside, and they are going to take this buy. Now it depends on your experience. Personally, I would have marked this as a trap because I wouldn't take this trade. I'm not saying I won't take this trade because it played out wrongly, or it made a loss. No. However, I understand that once this has formed over here, if you look at it closely, we form some kind of like liquidity over here. These were all what? Relatively equal. So I will personally mark this as liquidity. Okay, so I'm going to indicate this as liquidity, and I'm going to, you know, annotate this as what? As a smart money trap. Okay, so I'll just write in here, or let me see, I'll put this one right in here and say this is an SMT. Okay, so this will be a trap for me. Okay, and the reason is what I've given you. There is liquidity over here. Secondly, there is a point of interest. Third is also timing. Okay, so once I see this, I know I can mark this as a trap. And then after price has come into this point of interest, if you are in my private session, once again, you're going to find out that I have ways of marking my point of interest, right? And so this is valid for me, right? So right after this one, all I'm waiting for is for price to take out this high before I can get a trade. Okay, however, I got this 1 2 3 move within this leg, but because I want maybe more further confirmations, I will just wait for price to take out this high first. So what happens? We take out this high. After this high is taken, I'll be expecting price to come down. However, we didn't get price coming so much down. What did we get? After this push to the upside, price make another retracement, and then we have this 1 2 3 move. This is all these I'm showing you is one of my entry confirmations, right? They are some of my entry confirmations, and so this will be a valid trade for me to take like this. Okay, and my stop loss will be here, or I don't take trades with less than 2 pips stop loss, so this will be my stop loss, or let me say 2.5 nicely, and my target will be to where? To this high like this. Okay, now again, there is another smart money trap right in here. Because this point failed, there are people who are going to mark this as a range. Okay, they're going to mark this as a range like this. It means that they will be expecting price to come into this level, then they can sell. And the funny thing is, price gave them what they wanted to see. Okay, so they're going to mark this as supply, but with me, this is going to be a smart money trap. Okay, so I'm going to indicate this as a smart money trap. And what makes it a trap? This is a target liquidity. Okay, there's no way you should be looking for trades before a target liquidity is taken out. So what happens? They have this break of structure to the upside, break of structure to the downside. They are looking for it to sell right in here, but I know it's a trap, so I won't sell right there. Okay, so instead, I'm just going to indicate it nicely as a smart money trap. The same way I'm going to label this trade with a call out sign, with the risk to reward, the time, the stop loss, and all those needed information. Okay, then right after that, my next trade that fits my plan. Remember, we've come into the supply zone, we've taken out this high over here. Okay, once we've taken out this high, we've come into the supply zone. I know that I have this leg that I'm looking at. Okay, so believe me, this is also another setup for me to look for a trade. Okay, so what do I see? 1 2 3 move. This meets my trading plan. What do? I enter right in there my stop loss. Where? Right in there. Where's my target? My target is to at least take out this lows over here. Okay, or even this equal lows to this last candle over here. That was the last candle from the whole leg, from this whole internal leg. So I'm going to mark this one also like this as my demand. So I'll be expecting price to come here. Okay, so what you can see is that price gave me the reaction and then took me out on an L. So this was also another loss. Okay, so after the loss, what happens? I've taken out this high. I'm still within supply, and always there is something that I tell my private client. I say, pay attention to details. Right in here, I have a beautiful confirmation, but the sad part is my trade never gets triggered. So I'm just going to indicate this nicely, 2.5 per stop loss, and you'll be thinking that I'll be ending my TP here. Probably this could be my TP1, but because I see this wicks over here, I'm just going to mark this as what? Liquidity. Okay, this is going to be liquidity for me. Nicely, it means that I'll be expecting price to take this out. And if I'm expecting price to take this out, I'll be expecting price to come lower into these zones, probably into the same 1 minute candle that I marked. Okay, so somewhere right in here. And then I will mark this as a possible trade that I could have taken. But then what happened was our trade never got triggered. So again, I'm going to come up with a call out sign like this and say, this was a valid trade. This was a valid trade, but price never triggered my limit. Okay, So I indicate this one also nicely like this. Okay, then in here I can see that price has retraced into certain levels that I could have looked for trades, but there is no entry confirmation here for me. There is no entry criteria here for me. So I can write something here and say no entry confirmation, here. Okay, so I'll just do this. This is my own English, the way I will understand whatever I'm doing. Okay, so just have that in mind. So yeah, I'll just take this one right in here like this. Then after price has pushed to the upside, taking out this high again, I have another beautiful setup that I can look for. What is the setup? Okay, I've taken out this high. If you look at this, we have some sort of like equal highs, relatively equal highs here. So it means that this is going to be like an FU candle. Okay, and apart from it being an FU, we can see this beautiful confirmation right in here, this break and even this break. So it means that I'll be taking my sales from here. On the normal day, I'll be taking my sales from here. Okay, so this will be supply nicely, and I'll be setting this limit right in here nicely, my stop loss right in here. What happens is we got taken out. The funny thing about this setup is, if you are smart, you would have known what is happening. Okay, so even though we got taken out nicely like this, my TP would have been somewhere here. So even though we got taken out, this is a simple reaccumulation that has happened. Okay, so initially we distributed to sell and then we accumulated to buy. Okay, so I can just indicate that nicely right in here. I don't need to have those labeling creek, what jump, cross, creek. In fact, I don't need them. All I need is the logic behind whatever price is doing. So again, instead of doing 1.5, like I said, I don't do trades that is less than 2 pips stop loss. So this is going to be my target, or let me say I'll take like 10R. This is going to be my entry, sorry, and then my target I'll be like maybe 10R, nicely like this. Okay, so I'll just indicate with drawings that price accumulated to sell, sorry, price distributed to sell, and then we switched to an accumulation to buy. So this is a beautiful reaccumulation. Okay, so because of time, I'm not going to say anything. I'm just going to leave it like this. So I'll just label it nicely and then write whatever details that I want to write. Then after that, what do we see again? We've made a push to the upside. We've taken out the previous high. What happens is I could have looked for a trade at this high, but there's no entry confirmation for me. So what do I get? I have a push to the downside. Price never made a deeper retracement. We have a shallow retracement, another push to the downside. So it means that I have this leg right from this high to this low to work in. Okay, so what happens? Price makes a retracement into this leg. Now, if you pay attention to details, there is an entry over here, and it is based off a new theory that I'm trying to come up with, something that I'll be adding to my private sessions. Okay, and I call it the mystery of the doji candle. So there'll be a beautiful entry right in here personally for me. Okay, and my stop loss again, not 1.5, I'm gonna do 2 pip stop loss. Okay, and where will my target be? My first target will be to my reaccumulation zone like this. And then with my reaccumulation, one thing that I see over here is I have liquidity over here. Can you see that? Equal lows. So it means that I can expect price to take out this equal lows like this as my target. Okay, there is also another entry confirmation based off one of my entry criteria, which is right in here. The first one was even somewhere here, and then the most visible one is right in here. So this will be it, and then my stop loss will be above structure again, 2 pips nicely. My target were to take out liquidity right in here for 6.5. Okay, so at the end of the day, I'm gonna have all of these trades. Now, what did we have at the end of 29th December? What you're gonna see is we had 1, 2, 3, okay, 3, 4, 5, 6 winning trades with huge risk to reward ratios. How many losses? I have this loss, 1, 2, 3 losses, right? And then 2 trades that were untriggered, and then about 2 traps as well. 1, and then I think there was another trap also here. 2 traps. Okay, so once I have this, I take a screenshot, I add it to my trading journal. Okay, initially I do take the screenshot of every single trade with their entry details into my trading journal. After that, I take the whole day's price action like this, a screenshot of it, and then I put it in my trading journal. Okay, so this is how to backtest the right way. Try as much as possible to follow whatever I have taught you right now. So someone is going to ask me, when are you supposed to, now start using the bar replay tool to backtest? Now, let's say you've backtested this and you've seen this over and over, right? Then now you can start using the bar replay tool. That one, you can now re-engineer price back to this place and then try to see if you can catch all of these trades. That is what we call forward testing. Okay, so now you can now try to use the bar replay tool to see if you can catch all of these trades that you initially back tested in hindsight. Okay, so this is where I'm going to end today's video. If you found value in this video, give this video a thumbs up, leave a comment in the comment section. Okay, so see you in another video.